Happy Friday, everyone. We have more good news on the inflation front. The Fed's preferred inflation measure, known as the Personal Consumption Expenditures Index, came in lower than expected for August, coming in at an increase of 2.2% compared to 2.3%. And then core PCE came in as expected at 2.7%. This data cements the case of the Federal Reserve probably cutting interest rates by 50 basis points in the November meeting. Fed fund futures are actually pricing that in slightly more than a 25 basis point cut. That combined with final revisions of Q2 GDP coming in at 3% yesterday shows that the economy is still strong. We have GDP high and inflation low, closer to the Fed's preferred 2% range. That's almost a Goldilocks economy. That combined with rate cuts and then China's stimulus, China's unleashing really big stimulus, and that led Chinese stocks to really surge. And then chip stocks have recently done very well because Micron's earnings came out really great. They issued really good guidance for their high bandwidth memory chips. That lifted all of the chip stocks yesterday, including Taiwan Semiconductor, NVIDIA, AMD, ASML. ASML is the Dutch lithography company that makes critical components for the semiconductor chips. So we have so much good things going on in this economy, in this market. We have more global liquidity. We have rate cuts. We have China stimulating their economy, which is global, which adds to global liquidity. We have good news on chip stocks with their earnings reports. We have GDP high, and we have inflation on the low end. Look, I said in my last video that there could be some headwinds in terms of geopolitical tensions and some trading sideways until the election. But just because if we trade sideways until then, that doesn't mean that the market would go lower. I think if anything, the market would stay as it is. But obviously by year end, I'm still very bullish. I expect a melt-up scenario that'll lift the S&P 500 above 6,000 by year end, especially after the election. Look, the market might continue its run up even during the next 5 weeks before the election. But I expect the majority of the gains from now until year end to really happen afterwards. But maybe I'm wrong. But either way, there's a lot of strong positivity with global liquidity and GDP being high and inflation being low. So the tailwinds for that might outweigh and might be stronger than the headwinds of geopolitical tensions and the next 5 weeks of uncertainty about the elections. Let's stay tuned to see what happens.